It's touched 80 to the dollar. Officially, the Indian rupee is an octogenarian. But why is there so much high tauba? There's so much chest beating. Why should all of us be panicking? And of course, the bigger question, how did we get here? The tipping point was Russia's invasion of Ukraine that disrupted the supply lines of global commodities, triggering unprecedented inflation across the world. The war's economic fallout on India, of course, has been devastating too. Foreign investors have already pulled out over $30 billion from Indian stock markets in this calendar year. India has run up a trade deficit of $70 billion in just the first quarter of the current financial year. Foreign reserves have been drawn down, have fallen by $50 billion to under what we were earlier bragging about, the bragging point of $600 billion. And, watch for this one, and nearly $270 billion of external debt is coming up for redemption within 9 months. Now go figure which side of 80 will the rupee dance against the dollar. But you know, having said all of this, I find this 80 phobia very highly amusing. I wonder how many people understand that Japan and China, both miracle economies over the last half century, both of them deliberately kept their currencies low to win export markets for their manufactured goods. A cheap currency protected their, then low technology, uncompetitive economies, and that bought them the time needed to scale up to a modern, highly productive industrial base. Now, can anybody tell me two bad outcomes of a depreciating rupee? One, of course, is clear. A falling rupee fuels imported inflation, period. Higher oil prices, higher fertilizer costs, capital goods investments and whatnot. Every import becomes costlier and therefore it feeds into a price spiral. Granted. Now tell me about the second bad outcome. Are you left a bit looking for words and are about to say, I guess it has to be a falling, is because a falling rupee dents my national pride? Is that what you're going to say? Now come on. Is that even an economic argument, or is it simply a, sorry to say it, but a foolish political, almost a maudlin statement? Because the hard truth is that except for importing inflation, except for that, there is nothing, and I shall repeat, nothing negative about a falling rupee. Plus, if markets are efficient and governments do not panic or intrude very belligerently with a hard hand, a self-correcting mechanism kicks in. How? Well, let me show that to you with a simple example. Now imagine that 6 months back a foreign investor sold share A for 75 rupees, and since 75 rupees was equal to $1 then, that person, the foreign investor, took $1 back home. This had two impact points. One, the company A's share price fell, and two, the rupee also fell. Now, other foreign investors, who began to fear a falling rupee and a share price, that's a sort of double whammy, a double impact, a double bad impact on the value of their portfolio. Now, they also begin selling. And now imagine that this selling spree has taken A's share price down from 75 rupees to 60 rupees, while the rupee has now fallen from 75 to 80 to the dollar. So now what happens is that our think of what's going through the head of our first foreign investor, the person who had sold one share of A for 75 rupees and then taken a dollar back home. Now he is beginning to salivate, because now he can buy one share back of A for about 75 cents only, 75 cents, and therefore he makes a very neat profit of 25 cents for every dollar that he had invested, and that earns him a whopping 25% return, dollar return on his transaction. Now, across the economy, as asset prices fall and the rupee also falls, foreign sellers who were sellers turn buyers. Now, therefore, asset prices begin to harden, the rupee stops falling, domestic investment begins to go up, import substitution starts occurring, GDP grows faster, government revenues swell. All of that is good news, but inflation may continue to be an overriding risk. So, therefore, policymakers hike interest rates to control inflation. Now, this dampens consumption and investment demand and prices sort of stop rising. But ironically, when you hike interest rates, higher interest rates also attract more dollars, and that, as we have just seen, it bolsters stock prices and investment, and a sort of wealth effect begins to return in the economy. At some inflection point, rising incomes start to perk up household demand, and then the economy jumps back into growth mode. So, please do not rue the falling rupee. Instead, you must be concerned if competitive markets are damaged, if investments are duds and not productive, if the inflation scourge is killed by mercilessly increasing interest rates. We should avoid that. If governments raise taxes too sharply, that is also bad. If governments panic and clamp down trying to control and stamp out what economic variables which are just momentarily negative. If the governments come down with too hard a hand, that is a problem. But on the other hand, if policy interventions are deft, if they are delivered with a light touch, if they slowly allow each distorted price to correct and find its true competitive level, then my dear friends, a falling rupee could be the beginning of a blessed turnaround, not the end of the world.